Hey guys, welcome to the Stefan Livera podcast, episode 7. And today my guest is Nik Bhatia. Hey Nick, how are you?
I'm doing well. Thank you for having me.
That's great. Nick, thanks very much for coming on the show. And I'll just quickly introduce Nick for the listeners. Nick is a CFA charter holder, that's Chartered Financial Analyst, and he has recently come out commenting on how Bitcoin could financialize using Lightning Network to provide a sort of benchmark interest rate. And we're very lucky to have him. The CFA designation, from my understanding, is quite a difficult one to obtain. But as Bitcoin is growing up, so to speak, we're attracting new and different sorts of professionals into the space who are able to bring their professional skills to bear and help analyze Bitcoin and help us understand what is going on with Bitcoin. So I think the big thing is Nick has come out and written a series of articles: the time value of Bitcoin, the Bitcoin risk spectrum, next steps for node rates, and also one on observations from Alex Bosworth's tweet on fees. So, Nick, maybe if you want to just sort of open up with why is this historically important or different?
Thank you. Yeah, Lightning Network provides a really unique opportunity. The fact that the keys are still in your custody, to me, means that the direct counterparty default risk is not there. Now, that doesn't mean there is no risk in Lightning Network. You still have security risk and managing your payment channels correctly. However, you still have the option to call back any Bitcoin that is, taken from you without a place on the blockchain and without the proper signatures. And to me, that is the very distinct thing here. And I'm definitely not the first one to observe that we can earn interest from a Lightning node. That's something that was discussed pretty early on in the Lightning Network, as well as the phrase time value is mentioned 6 times in the Lightning white paper. So it is kind of all out there for us, but I started to think about what could we do with these interest rates, and if we can come together and try to conform on a calculation method, we can perhaps come up with a benchmark interest rate, which would be considered a very relatively low risk lending rate or short-term leasing rate that loans can then be priced off of.
Yeah, no, great points. And I think it might be useful just to explain for the newbies to Bitcoin. Let's say someone has a basic awareness of what Bitcoin is, but not what Lightning is. How does that sort of play out for them to try and understand how interest works? Like, say, what are the relevant security risks on using Lightning Network compared to Bitcoin?
Sure. So the way to think of Lightning Network is an app on top of Bitcoin. So to use the app, you have to have real Bitcoin, and that's why it's called a layer 2 technology or a layer 2 solution, because it uses the first layer for its security and for its unit of account. So it uses Satoshis, but the Satoshis that you use in Lightning Network have to be real Bitcoin that has a place on the Bitcoin blockchain. So Lightning Network is an app. You bring Bitcoin into that app, and it basically functions as a peer-to-peer cash system. The way that it works is different than the base layer, because on layer 2, it's actually peer-to-peer with bidirectional payment channels, as opposed to the base layer, which transactions get broadcast to everybody, and so it's like a peer to every peer on the base layer, and Lightning Network is more peer-to-peer. So it has different security because you cannot be transacting in the Lightning Network without having your Bitcoin in that Lightning node, and that Lightning node has to stay connected to the internet. So the people that have Bitcoin in cold storage with no connection to the internet, which is considered the highest form of security for your Bitcoin on the base layer, that situation is not possible on layer 2. So that's the major security trade-off there.
Yeah, great points. Okay, so with that said, let's now go into a intro discussion on the basic concept of, as you outline in your article, LNRR. So yeah, if you could just outline some of the basic concepts around that, and what are some potential ways that we could calculate LNRR?
Okay, so I'll start with traditional finance. And in traditional finance, we use reference rates or benchmark rates to price other lending off of. And the reason we do that is we need a time value calculation for lending to what's considered a very low risk or risk-free entity. So in the current financial system, U.S. Treasuries are considered that asset. They're called risk-free, but we all know that any entity can default at any time. It's just that the U.S. government has not done so for a couple hundred years, and so it is considered by far the strongest counterparty out there. When other people borrow or other corporations borrow, most times those lending rates are referencing U.S. Treasuries. So it's U.S. Treasuries plus a credit spread, and that credit spread represents the difference of credit worthiness between the borrowing entity and the U.S. government. So that's why we have benchmark interest rates in traditional finance, and to use Lightning Network for that same type of idea, we can average the interest rates that Lightning node operators are earning. And so I'll explain a little bit about that. A Lightning Network node operator can put Bitcoin into payment channels, and that is your principal. You can fund payment channels, and with payment channels open, users of the Lightning Network can use that payment channel to route their fees. You can charge a fee for that routing. That routing fee is your income. So you have principal, which is the initial Bitcoin. You have income, which is the routing fee that you're earning. And then if you take that sample over a period of time, you can say, oh, I earned 2% this month on my Lightning node. And so we don't have a way to calculate this yet. The variables are all observable for anybody's Lightning node, so you can calculate that yourself. But as far as a standardized way to do that, we don't have that yet. So my idea is, let's try to get people to come up with some calculation methods. So are we going to use hopefully we'll use block time, and what time period are we going to calculate it over? Is it going to be per channel, or is it going to be per node? I'd like to see a node level, because I think that the node level represents some information value as opposed to individual payment channels. And once we can calculate your interest rate for your own node, then we can publish that rate to each other and see what the market is for that type of activity, which is basically providing liquidity to the Lightning Network and charging routing fees to provide that liquidity. So this liquidity provider role can be valued by observable variables already, and I think that we should do that and try to publish that to each other. Now, going further into the future, once that rate is published to the public or the rest of the Lightning Network, maybe we can come together on the best way to calculate it. But I still really think that's a long way into the future. The most important thing for now would be calculating those individual node rates.
Yep, great points. Great points. One thing that might be just an interesting observation for the listeners, currently, with the US treasuries and the bonds as the underlying sort of benchmark rate that the world uses, we could say that the world has to make an estimate or have some kind of expectation of future inflation in the US dollar, because if the underlying currency that the bond is denominated in obviously depreciates, well, then what you're getting paid back in decreases. And we might even just contrast that with Bitcoin, because over the long run, we might anticipate that Bitcoin's supply is more steadily known and known in advance. So that might actually be one way in which the LNRR is superior to the rate in terms of predictability over time, maybe superior. So that's just something else to note. Okay, and then so I think the next question would just be, could you outline a little bit around the differing levels of risk? So basically the points from your article in the risk spectrum article. So yeah, if you could just outline a little bit around the different levels of risk and the different level of return that might be offered for those.
Right. So the first level of risk is going to be Bitcoin in cold storage, because that's going to be considered the safest way to store Bitcoin. Now, the true interest rate of Bitcoin in cold storage is either going to be zero or negative. The reason it's not more than zero is because you can't earn anything from your cold storage Bitcoin, as long as you don't surrender those private keys. And but it can potentially be negative, because to use that Bitcoin, you will have to pay a transaction fee to a miner to use the base layer, or the hardware or software combination that you're using costs a lot of money, and that's just a sunk cost. So really, we can think about Bitcoin in cold storage as having zero return. The next level of risk I see is to keep your Bitcoin in a Lightning node. The reason why is because, like I said, you still have custody over your Bitcoin, but that Bitcoin is now in a hot wallet environment. So that jump from cold storage to hot storage is the first significant jump in risk. And I think that has to be measured and valued. And I think we can do that by calculating individual Lightning Network node interest rates. The next step beyond that in the Bitcoin risk spectrum is going to be now taking counterparty risk. And so that is, the big leap. That's why I drew that line down the middle of the graph in that picture, because I wanted to show the big difference between custody of private keys and not custody of private keys. We all know the dangers of keeping your Bitcoin on an exchange or in an online wallet, basically anything that requires a trusted third party. And so I want to separate, what Lightning Network Bitcoin is from lending real Bitcoin out in the real world, whether it's on an exchange or whether it's in any sort of direct lending sort of way. So, that jump from Lightning to counterparty risk is the big jump. And what I want to focus on is that Lightning Network point before you jump to counterparty risk. And it's interesting to note that, we're not just going to have one way to keep custody of your Bitcoin, and that's in cold storage. We have another way now. It's Lightning Network.
Yeah, great summary. And I think the other point to note from the sort of Austrian point of view is, let's imagine that we're living in a Bitcoin standard world. Even in the case of cold storage, we may see a kind of gentle growth deflation, meaning that over every year, your Bitcoin actually does become slightly more valuable just because of the growth in the economy, as opposed to that sort of inflationary world where your dollars are decreasing in value over time. And so it may end up being that, cold storage, you might quote unquote make a little, a small, sort of 2% per year, but then obviously pay the costs associated for that. But then with LNRR, it's kind of like you might make that 2% growth deflation as well as the fees and interest earned from staking your coins into a Lightning Network payment channel.
Yeah, that's a really interesting point, because what you're describing is a real interest rate that's actually higher than the nominal rate. And that would be a really unique situation in a currency that is experiencing that sort of deflationary trajectory. So it's a really interesting point to think of, because in traditional markets you have a nominal rate and you have an inflation rate, and then your real interest rate is going to be most times lower than your nominal rate. So in LNRR, it could actually be the opposite way.
Yeah, exactly. And I think some of these things we have to, because we have been living in a world with fiat money for so long, nobody in living memory really knows what, it would be like let's say if we turn back the clock 100 or over 100 years to gold, what things were like then, and what was, even what was the interest rates then. Although I suppose you can look up historical rates. But yeah, just an interesting counterpoint to think about in terms of what the world might look like. So I think the next question I wanted to ask is that there are actually multiple ways you can make money on the Lightning Network. And so Alex Bosworth is one of the pioneers, as you know, in this space. And he's come out, and some of his tweets have been very interesting because he's basically pointed out that routing and swaps is only one type of paid service that a Lightning node operator could provide. So examples that he has include number 1, watching for channel breaches. Number 2, backup wallet states. Number 3, provide coin mixing liquidity, and a range of other possible services. So then I suppose my question to you then is it LN interest rate, or is it fees, or how do you think about that, Nick?
Yeah, so the routing fees require capital and time locks, and that is what makes it interest. Now, some of these other ways to make money in Lightning, like if you're going to watch for breaches, I don't think that it requires capital to do so, so I wouldn't necessarily consider it interest. But if you're going to do some sort of coin mixing where you do have to stake Bitcoin, I think that that could be considered interest. So yes, it's very interesting that there are going to be all these ways to make money on the Lightning Network, but I think it's important to separate which ones require technical expertise and which ones actually require technical expertise and capital to be time locked, right? And so that's what you're doing. You're time locking your Bitcoin when you put it into a payment channel and make it available for routing. And I think that it would be similar in some sort of coin mixing scenario where you're actually putting that Bitcoin into a payment channel, and there's a time lock so that the mixing can happen with your Bitcoin, and that I think would be considered interest.
Yeah, great point. So essentially the distinction then is that you are staking Bitcoins into the channel, and that you're required to do that to perform that service. So then I guess in a parallel way to how banks make money today, many banks make money by lending, for a home loan or for a mortgage, credit card, personal loan, and they would make interest revenue on the on the interest rather, because they're loaning out money, and then they would also have a component where they're making money from the fees. So perhaps it's a parallel there that Lightning Network nodes would have both interest income and fee income.
Yes, I think that the parallels to banking for Lightning nodes are quite endless. And it might scare people because they think, oh, no, banks are going to come in and they're going to take over Bitcoin. But I think that Lightning Network is going to develop as a free market because of the very low barrier to entry. Right now, I think the highest barrier to entry is the technical expertise. The the other barriers to entry are really it's really not there. You just need the software, which is accessible and free on the internet, and then you need Bitcoin. Obviously, you need capital to bring into the Lightning Network, but the technical expertise, I think, is the largest barrier to entry. Over time, as the development continues to improve on Lightning and the user interface and the user experience continues to get easier and easier, you'll have basically no barrier to entry to run a Lightning node. So whether banks want to come in and start nodes and stake a lot of capital and try to make money by routing fees or not, I think it's a free market, and so let them come. Let anybody come in and try this out.
Yeah, that's and I think that's related to another question I had, which is around, could there be a tendency for centralization? But as you said, it may be balanced out by competition, as this is an open entry market. Unlike banking in the modern day world, which has kind of regulatory barriers to entry, and that you need a certain size to be competitive. Have you got any thoughts on whether you might need a certain size to be competitive as a Lightning Network node?
I don't know. I think that the skill that is required to understand positioning in a routing network will be more important than the amount of capital that you bring. Now, obviously, the more capital that you stake, the more opportunities you will have to earn routing fees. So, that's definitely there. But if you're blindly opening payment channels to positions on the network that nobody is using, then what good is your large capital stake? So there's definitely going to be a quantitative and a qualitative aspect to performance from an individual Lightning node's perspective.
Yeah, great points. Great points. Okay, and then the next one I wanted to talk about was just around fractional reserve banking versus full reserve banking. And could you please comment on how HTLCs, that's hash time locked contracts, operate to ensure that the system stays full reserve?
Sure. So, disclaimer here, I am not an expert in computer science at all. I'm a financial person. So, I've done my best to understand the mechanisms that Lightning Network uses and that Bitcoin uses. And from my understanding, the hash time lock contracts, in these contracts, you are broadcasting the current state of the payment channel between you and your the other side of your channel. So the balances will go up and down, and each party will sign an updated state of that ledger between those two parties as they go along. Now, if the other side of the channel tries to broadcast a previous state in which they have more money than the current state, that is them attempting to defraud you from your Bitcoin. That gives you then the option to broadcast the anti-cheat transaction embedded in these HTLCs, which allows you to sweep all the Bitcoin from the channel. And that's currently how it works. So there's a disincentive for fraud. It's not that the person cannot steal your Bitcoin. It's that if they try to, you can take yours and theirs with you. And that's really a unique situation. It doesn't really exist in the traditional market, so there's not a really good analogy there. But that is my general understanding on how these HTLCs work, and why I do believe that the counterparty risk, the explicit counterparty risk, is not there as long as you are managing your HTLCs correctly and properly.
Yeah, got it. Yeah, and I think the other thing that's interesting there is just that, yeah, so some people, I've heard it colloquially termed as, the justice transaction, or the one that's kind of basically ensuring that, stopping someone from cheating you. And also, it's worthwhile to note that there is a current proposal known as L2, ELTOO, and that proposal, from my understanding, changes it such that you don't get to sweep all of the counterparty's funds, but rather you just broadcast the more up-to-date state and take back only kind of what's justly yours, so to speak. But yeah, fascinating stuff from a technological point of view and from from this financial risk point of view.
Yeah, the L2 proposal is a really interesting one. I've recently been reading about it, and it does change the mechanism, the security mechanism in the Lightning Network. So it'll be interesting to see how that plays out.
Yeah. Okay. And then I suppose if fractional reserve banking were to occur, then from our understanding of HTLCs, it would have to occur on upper layers or some sort of hosted wallet or LN node service. So perhaps we would have to imagine some kind of scenario where maybe your retail bank runs the node for you, and maybe they give you a banking app, and behind those layers of abstraction underneath the hood, so to speak, that they could run fractional reserve banking in the background. But I suppose that's, in my view, it's an unlikely scenario, but potentially possible. Do you have any comments on that?
Yeah, I actually would take the other side of that. I would say that it's likely that an entity tries to come in, start a Lightning node, and then make an app and make people either think that they have real Bitcoin or not. Whether it's going to be fraudulent or not. I do think people will try third layer fractional reserve opportunities. I just think that it's going to be the evolution of banking on top of Bitcoin, that people will want to fractionally reserve it because Bitcoin is so scarce. It's not, there's not going to be enough to go around. And I think that people will try to, come up with a way to fractionally reserve it on upper layers. There's nothing we can do to stop it. I'm just throwing it out there. But definitely when you're using Lightning Network and you have your own node, it's a fully reserved system. You can only participate in it with real Bitcoin.
Yeah. Okay. Great points. Yeah, I think we'll have to just sort of see how it evolves. I think it depends who you read and whose arguments you believe are more convincing. But some Austrians, such as Huerta de Soto and others, have said that fractional reserve banking is only stable with a central bank lender of last resort and with other interventions such as the legal tender laws that force us to sort of accept a fractional reserve, in this case, a fractional reserve coin, the same as a full reserve coin. But definitely I'm willing to be proven wrong, and I'm willing to sort of see how it evolves. So that's an interesting one to watch for. The next question I had is just around your post, the observations from Alex Bosworth's tweet comparing where basically you compare the interest rate earned by Andreas versus the rate earned by Alex. Do you want to just maybe give an outline of what you did in that article?
Sure. So Alex Bosworth put a tweet out. He put the starting principal of two different nodes. He did that in US dollar terms. Then he put the income in routing fees in Satoshi terms, and he said that they did this in 1 week. It was a 1 week comparison. So I took those numbers, I converted the dollars to Bitcoin, and I calculated what the interest was on each node for a week, and then I annualized it. And what I saw is that Alex Bosworth earned 0.4%. Annualized interest on his node for that week, and Andreas earned 0.005, so less by a factor of 80. And I thought that difference was very, very interesting. And it just goes to show you that capital has nothing to do with it right now. Alex Bosworth had put just over $7,000 in his, and Andreas had over $300,000 in his. So Andreas clearly had way more capital staked, and even with that much more capital, he didn't even earn more fees than Alex did. And then when you actually calculate it on an interest basis, which uses how much principal you staked, the difference was pretty drastic. And I just wanted to throw out the calculations. I did a little spreadsheet and put a table and just put it in an article and wrote my observations and kind of how I calculated it. And it was great to touch real data. And I hope that more people will publish their rates. Now, a couple disclaimers. One is that Alex Bosworth wanted people to know that this is not indicative of future rates. This is just what he happened to earn for 1 week. And actually, he tweeted a day or two ago about how he didn't make as much in July as he did in June. And for whatever reason, I'm not sure. So we don't know how these rates are going to play out in the future. And I definitely wouldn't take 0.4% or 0.005% as any true information value in by themselves. But I think the real difference here is the fact that they were different by a factor of 80. And it's going to show you, how skill is going to play into people's ability to earn money on the Lightning Network.
Yeah, great points. Great points. And then I think the next question then might be a bit of a flip side question. Is there a saturation risk or point like Andreas Brecken potentially saw, that maybe he had just, he just reached a level beyond which he couldn't really earn more? So he might, no matter how many more Bitcoins he stakes, he's just not actually earning additional interest on that.
Oh, definitely. I mean, there's going to be a law of diminishing returns. for sure, especially with the Lightning Network not being super active yet, right? It's still in its early stages, and the connectivity is just taking place right now, and then hopefully the adoption will continue its pace. But right now, it's not being used that much, and so you're gonna overpower the network with too much capital, and you just won't be able to earn the same amount in interest terms. You might be able to earn the same amount in routing fees as somebody else, but you're locking your time locking your Bitcoin to a much greater extent to do that.
Yes, yeah, great points. And I suppose in that sense, let's say Andreas was risking 300,000, then he's essentially risking a lot more in terms of the security of those Bitcoins that must be held in a hot wallet, as opposed to where people generally prefer to store in a cold wallet, which is more secure. Yeah.
That's
And
right.
then, so the next, you've gone? Yep.
No, that's right. Yeah.
Yeah. Okay. And then, so I suppose we could say that this may potentially help stop centralization as Lightning nodes may kind of hit a saturation point.
Yeah, I think that like people will come in and stake Bitcoin to Lightning payment channels in an incremental way. Now, what Andreas was doing probably has more computer science motives than somebody else that has more financial motives. So, someone with financial motives is probably not going to come in with more capital, or to use your term, a amount of capital that saturates the network. Um, Somebody that is coming in for financial reasons is going to do so at the margin, and that just means slowly but surely testing it out to see how they can make money off of it. So I don't really expect these large players to come unless it's for the computer science research angle.
Yeah, great points. Yeah, I think it is worthwhile considering the motivations of how people are motivated. Okay, so the next one I wanted to ask you was around channel management and security risk. So, what if this risk turns out to be really high?
It could be. It definitely could be, and then I think the health of the Lightning Network will be in jeopardy. Honestly, my idea about coming up with a Lightning Network reference rate really only works if the Lightning Network is adopted and used and incrementally secure as it evolves, much like Bitcoin has. See, Bitcoin is about to turn 10 years old, and the security is we don't really even talk about it much anymore because the empirical data is there that Bitcoin works and its uptime is pretty incredible, and so that will have to evolve on Lightning Network for the calculation to evolve there. We don't really. I mean, how often do we talk about uh, you know whether the difficulty adjustment period is the right target at 6 blocks per hour? We take those types of things for granted now because Bitcoin works and it's a secure base layer. And so Lightning Network now we'll have to see, and it might, think about some of the major changes to the protocol, Bitcoin protocol, in the first few years, right? Multi-sig wasn't even a part of Bitcoin when it was born. So what is going to happen? Maybe this L2 proposal completely changes the way that the security mechanisms work in Lightning Network, and it makes it better. And then there are some more updates down the road. I think the health of the Lightning Network is something that will have to evolve for people to trust it and trust its protocol.
Yeah, great points. Yeah, I think what we'll just have to see is basically more quote unquote Lindy Effect. We'll just have to see this thing survive for a few more years until people uh, start to figure out ways to really secure their Bitcoins as much as is feasible within a Lightning Network node, as opposed to the cold storage method of security. And then
And that's
obviously
really
also, as
that's
you
really
mentioned,
all it is. That's really all it is. It's just time. Um, the Bitcoin protocol has survived for this long, and so it's possibly and potentially indicative of how much longer it can last into the future. And so, if Lightning Network, works for a few years, the odds are that it's going to continue to work.
Yeah, yeah. Okay. And then, so what about the risk that depending on how many Bitcoins you have staked, depending on how many channels, who those channels are with your channel management skill, what is there a potential risk that we won't be able to come up with a standardized calculation of LNRR and just everyone will earn their own different rate?
Yeah, I think there is a risk to that, but I'll turn it into something optimistic. So let's say that we end up coming up with 4 or 5 different ways to calculate it, and those 4 or 5 ways are popular in either different parts of the world or different pockets of the internet. So, maybe the financial system uses one way and merchants and consumers use another way, and mom and pop shop liquidity providers use a different way. And these ecosystems evolve around these different calculation methods. I think that would be just fine because it's a free market. And if that's how the system wants to evolve, I do believe they will converge. I don't really think that in the long run we'll have uh, no consensus whatsoever on how to calculate interest. I think Lightning Network wallet providers will offer those types of calculation methods to their customers in the future. So, any good Lightning wallet in the future will have this, and so um, maybe we'll see 10 different types, 5 different types, or one different type, but I don't think it matters as long as people are trying to calculate it. A market will evolve for consensus.
Yeah, I see. Yeah, no, that's a good point. And so we may see multiple different standards for calculation of LNR. As you mentioned before, you could do it by block, you could do it by time, say day rate. And then in practice, we may see different LN nodes earning different rates based on their channel management skill.
Exactly.
Yeah. Okay, so I think we've got a little bit of time. Just curious if you've got any insights or comments to share from your discussions with Lightning developers.
Yeah, I'm having some really interesting conversations. I think people are excited about trying to play around with these ideas and come up with ways to calculate the fees that they're earning. So, one conversation I had, um, a new colleague of mine, he is working on ways to build some plugins with Excel. And I think that's really exciting. I think you had Pierre on the show recently, right? And so Pierre's working on some really exciting stuff to start off, and I think that's really cool. I'm in the LND Slack now, and I'm just doing so to learn and ask questions to people. So one point Alex Bosworth made to me in the Slack was that he does not believe that you can prove your own Lightning Network node interest rate, and that is very interesting to me. I'm going to take his word for it for now, and the implications of that are that first of all, it makes sense to me, right? The way that the onion routing works in Lightning, and how you can be isolated from people trying to identify what you're doing. Um, so it would make sense that the rate that you're earning can have privacy. Now, if that's the case, then publishing that rate to others uh, will require trust. And when you take that leap from trustless to trusted in Bitcoin, it's like crossing. It's like crossing this imaginary line that all of a sudden the keys are, or the trust is no longer something that we can rely on. And if that's the case, then the market will develop in different ways than if we could potentially publish something that's cryptographically provable to each other. So I'd really like to see people working on that, or to opine on if there is a way to cryptographically prove this to each other, because that will. I mean, don't you think that that'll be a huge a difference in how LNRR develops, whether or not we can trust the rate that people are publishing to each other.
Yeah, no, I agree. I think that will make a big difference, and it will be difficult to use LNRR as a benchmark rate if we can't sort of easily observe it. But I mean, that said, it's not that I'm pretty sure, even today, it's not that, US treasuries are kind of cryptographically proven the rate. It's just that people trust certain institutions to truthfully report their rate. Though obviously there have been, scandals and problems with things like the LIBOR and so on. But yeah, potentially if it does not end up being able to be cryptographically proven, we may end up having to sort of trust banks to report the LNRR rate, and maybe other individual LN node operators will just kind of self-report a rate, and if someone is kind of reporting some unrealistically high number, then other people would sort of say, hang on, that guy's probably lying, right?
Right. And this is the best part about Bitcoin. If you don't want to trust anybody, you don't have to. You can keep your keys in cold storage, run a full node, and verify that your Bitcoin balances are what you know them to be. And if you want to start participating in this sort of liquidity providing opportunity, and then building on top of it, you can do so, and you can opt into it. And so, the criticisms of Lightning Network or trying to financialize it by putting interest rates on it, we're not forcing these types of changes on Bitcoin on the base layer or anything to do with it. This is innovation that's happening on upper layers, and so why not try all these things? Why not try situations where you do have to trust third parties to facilitate trade? I'm not going to put all of my Bitcoin in the Lightning Network. That would be dumb, right? Because you're risking it, and we all know how scarce Bitcoin is. So to just put it all in this second layer to maybe potentially make money off of it, just wouldn't be wise. So let's put some of it in, or a small fraction, and play around with it. And if you think about the way the financial system works, it's layers and layers of trust on top of each other, and you only have to go up as far as you want, right? If you're going to lend your money to peer-to-peer lending network versus lending your money to the U.S. Treasury, you know the risk that you're taking there, and why not start to provide that type of risk-reward spectrum on Bitcoin in a completely opt-in way on upper layers? So I think it's very exciting to see how it's going to play out.
Yeah, no, I agree. It's a very fascinating time to be alive, really, to see the birth of this. Okay, so let's switch gears a little. As a CFA charter holder, I'm sure you must have some thoughts or comments on some of the recent announcements about the CFA. Is it CFA Institute, who are basically going to include some cryptocurrency material in their training and exams?
Yeah, it's very exciting. Proud to be a charter holder with this announcement. I still don't know what they are going to cover, so I'm very curious to see when the curriculum comes out. I hope people post pictures of the books on Twitter so that we can all see what type of information that they want their candidates to learn. But it is going to be interesting to see how much they cover Bitcoin and how it works, and and how they describe its potential role in an investment portfolio. And CFA charter holders are employed by very large asset managers all over the world, and these very large asset managers currently, while they're all aware of Bitcoin, and they know that this new cryptocurrency industry is developing, the investment guidelines of their clients and those institutions do not have Bitcoin as an allowable investment. I can say that with a pretty high level of confidence. And in 5 years, you have thousands of CFA charter holders that have gone through the whole curriculum and have learned a lot about Bitcoin, both in the book, and then went and learned about it themselves, and maybe learned a little bit of Austrian economics along the way. It's going to shift behavior, at the margin, definitely. So, over a long-term time horizon, yeah, this is definitely great news.
Yeah, great points. And I think, yeah, you're right. It often comes back to the Lindy effect, as people like Pierre Rochard often point out, that it's just a matter of time that people need to become familiar with Bitcoin and even indeed LNRR. Who knows if someday in the future, the CFA new starters or kind of people undertaking the CFA exams will have to learn about LNRR. So it's a fascinating space. Okay, so I think we'll probably start wrapping up the discussion then. Did you have any final comments you wanted to make, Nick?
Sure. So I'm really hoping to see Lightning Network developers um, give their opinions on whether or not that this can be done. Uh, I'm pretty sure it can, because the variables that we need to calculate individual nodes' interest rates are all there, and so I'm really just excited to engage with developers, talking to some people that are doing some interesting things on the base layer, not even Lightning Network, but instead of oracles, are using um, observable occurrences in the blocks themselves to execute futures contracts. And it's so there's just a lot of really fascinating stuff going on. And I think that if we can get everybody thinking in block time, we can see a whole spectrum of financial instruments that are not even on a counterparty risk level, but on a non-counterparty, uh, you know, blockchain secured, verifiable, type of on-chain securities. And so, um, I'm going to keep working as hard as I can to disseminate the information, learn as much as I can, talk to developers, and just learn from them, and brainstorm with others to see how we can really financialize the on-chain world, and so that we can all start thinking in satoshis and block time.
Yeah, great points. Great points. Okay, guys. So you can find Nick at on Twitter, and his handle is at time value of BTC. And I'll also post a link to Nick's Medium articles, and they are the time value of Bitcoin, Bitcoin risk spectrum, next steps for LNRR, and observations from Bosworth's tweet. So with that said, guys, I will put a show notes page on the website, stefanlivera.com. Just search SLP7. And lastly, guys, if you've enjoyed the podcast, please give it a rating, give it a 5 stars on the iTunes store, and just share and let all your friends know about the podcast as well. That's it from us. Thanks, guys, and we'll speak to you in the next one. Bye.